Ladies and gentlemen, good day and welcome to the Salasar Techno Engineering Limited Q4 and FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Anand from Ernst & Young. Thank you, and over to you, sir.
Thank you, and good afternoon, everyone. Before we proceed, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the financial results and developments and to answer your questions today, we have the senior management of Salasar Techno Engineering, represented by Mr. Shashank Agarwal, Joint Managing Director, and Mr. Pramod Kumar Kala, Chief Financial Officer. We will start the call with a brief overview of the past quarter by Mr. Agarwal, followed by a Q&A session. I am now hand over the call to Mr. Shashank Agarwal. Over to you, sir.
Thank you. And good afternoon, everyone. On behalf of Salasar Techno Engineering Limited, I welcome you all on the Q4 and FY22 earnings call. I hope everybody is safe and is in good health. We have already uploaded the investor presentation on the company website and the stock exchanges, and I hope you have gone through the same. Salasar, with its established market presence and a strong track record, have been delivering a consistent performance over the years, underpinned by its positive financial metrics and robust order book. Repeat orders from well-known customers including Indus Towers, American Towers, Reliance Jio, Indian Railways, State Electricity Boards, and many other customers provide ample opportunity for us to maintain the growth momentum with a low counterparty risk in terms of payments. Our new heavy steel structure division is consistently showing a stable growth, with the plant being fully booked for manufacturing for the next 1 year, with the supply of rail, road bridges, structures, plant structures, and prefabricated building structures, etc. Moving on to the financial highlights, during FY22, the company reported a consolidated revenue of rupees 719 crores, a 20.5% year-on-year growth as compared to rupees 597 crores in FY21. This is the highest ever revenue for us since inception. Manufacturing of steel structures contributed 77%, EPC for power transmission contributed 18%, and EPC from railway electrification contributed 5% to the overall revenues in FY22. % from manufacturing steel structures, 14% from EPC for power transmission, and 6% from EPC from railway electrification during FY21. EBITDA at rupees 69 crores was up by 21% year-on-year as against rupees 57 crores in FY21. EBITDA margin was stable at 9.6%. PAT for the year was at rupees 32 crores as compared to rupees 30 crores in FY21, a 5.2% year-on-year growth. PAT margin stood at 4.4% in FY22. Net debt position stood at rupees 238 crores as on 31st March 2022, with a gearing at a comfortable range of below 1x level. In Q4 FY22, the company reported a consolidated revenue of rupees 212 crores, which is more or less on the similar lines as to Q4 of FY21 revenue. The EBITDA for Q4 FY22 was at rupees 16 crores as compared to rupees 19 crores in Q4 FY21. The EBITDA margin for Q4 FY22 stood at 7.6% as against 9.1% reported in Q4 FY21. a 154 basis year-on-year decline due to abnormal and unprecedented volatility in the commodity prices, both for steel and zinc. The company reported a profit after tax of rupees 7 crores during this quarter. We have an overall order book of rupees 1,182 crores as on 31st March 2022 on the back of strong order inflows in from our knowing verticals of heavy steel structure division. The breakup of the order book is that we have unexecuted EPC orders of rupees 808 crores, L1 EPC orders of rupees 130 crores, manufacturing orders outstanding under heavy steel structure division of rupees 200 crores, and rupees 44 crores of export orders of telecom towers in hand. In addition to the above order book, the company received telecom orders for tower structures on a rolling basis, on a site-to-site basis. As Salasar always have almost rupees 30-35 crores of orders in hand on a monthly basis. The unexecuted orders of rupees 200 crores at our heavy structure division as on 31st March 2022 has increased from rupees 163 crores as on 31st December 2021. To capitalize on the growing industry demand, we are undergoing capacity expansions. In Hapur, Unit 3, in UP, we will be adding a new galvanizing unit at a cost of rupees 50 crores with a capacity of 96,000 metric tons, which is expected to be commissioned by December 2022. The total galvanizing would thus reach to almost 2 lakh metric ton capacity after the commissioning of this new facility. Under heavy steel structure division, also we are coming up with a second plant of 15,000 tons metric ton capacity at Bhilai, Chhattisgarh at a cost of rupees 60 crores. This plant is also expected to be commissioned by December 2022 and will help us to tap opportunities in
This is the operator. We are not
with the hello.
Yes, sir, we can hear you now.
Yeah. With the telecom operators looking for better connectivity and potential 5G spectrum auction around the corner, we believe huge opportunities are in store for us. We continue to focus on building unique steel structures to fulfill the growing need of diverse industry, including telecom, power, railways, and specific needs for industries like solar, bridges, and utility poles. This is all from my side. I would now request the moderator to open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Viral Shah from Yes Securities. Please go ahead.
Yeah, good evening, sir.
Good evening.
Sir, I have 3 questions. One, when you look at in terms of bid pipeline, how is the bid pipeline looking in terms of segment-wise? It could highlight which are the segments where we are seeing a significant attraction in terms of bid. That is the first question. Second is in terms of our order book, how much of the order book will be fixed price? So we can understand what will the margins going forward on the order book what we have. And thirdly, when we talk about capacity addition which is happening at both the facilities, right? And around 110 crore of kind of capex. So post commissioning, how much time it will take to stabilize, and what will be our FY23-24 guidance based on that? Yeah, thank you, sir.
Okay. So as far as the bid book is concerned, we have become selective in bidding the tenders as of now because we have a very good order book in hand, which would take a while before we can actually execute it. So we are selectively choosing the tenders wherein we would like to bid, which have better margins and better payment terms. But anyway, we are bidding tenders in the range of 400 to 500 crores. The second question is the overall order book is almost 1182 crores, out of which unexecuted EPC orders which are already in hands are almost 808 crores. And we have orders of EPC wherein we have 130 crores where we are already L1, where we are expecting the LOIs or the contract to be signed. Apart from that, we have almost 200 crores of orders on our heavy steel structure division as on March 31st, 22, which is to be executed over a period of next 12 to 16 months. Apart from that, we have regular order book from telecom operators and tower cos, wherein we supply telecom towers in the range of 30 to 35 crores every month. As far as the segment is concerned, in EPC, the orders are mostly in for power transmission lines and substations and railways. These are the two main sectors which we do in EPC. And in terms of transmission, we have almost 361 crores. And in railways, we have almost 384 crores. And others is 61 crores, which are some other jobs which are similar to a transmission or transmission. Like we have some EPC orders for telecom also from ITI. In the telecom industry, those are telecom towers, but they'll come under EPC because we are doing the complete turnkey job over there, and All India Radio, where we are putting up some specialized towers for them under EPC contract. That's the segment-wise order booking. And your third question is on the guidance of March 23. Well, we are poised for a growth of at least 30-35% from here for this current financial year. We have enough order book. We have enough opportunities available. We are seeing the writing on the wall, and the order book is good. And we are sure that we'll be able to, give you a top line which is up from 30-35% from here.
Oh, fair enough, sir. So when you look at it in terms of margins, how much will be a fixed price contracts and how much will be pass through or variable?
This is the operator. Sir, the audio is breaking from your line. Please check.
Hello? Am I audible?
Yes, sir.
Okay. So to answer to that question, only one or two contracts which are fixed price contracts. Maybe of those orders would be in the range about 50 crores.
Again, sir. The audio is now breaking from your line.
How come on? Can you hear me now better?
Please go ahead, sir. Yes.
Yeah. Okay. So I was mentioning there are only two contracts which are under fixed price contract, wherein the values of the total contract would be in the range of 50 to 60 crores. Other than that, all orders are on a price variable clause, wherein all the ups and downs would be ultimately covered by the customer based on the movement in the steel prices and the zinc prices.
Yeah, got it, sir. Thank you so much.
Yeah.
Yeah, I got it. Thank you so much, and all the best, sir. Thank you.
Thank you, Vedi. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Nandish from Money Control Research. Please go ahead.
Hello.
Yes.
Am I audible?
Yes.
Yeah. Sir, my first question is, what was the order inflow for the March quarter, and what is the target for FY23?
Hello. Hello.
Hello.
I cannot. Hello. Yeah. Can you repeat that, please?
Yeah. Sir, my first question is, what is the order inflow which we received in the March quarter, and what is the targeted order inflow for this year?
Okay. So as on 31st December, I think we had an order book of almost close to 980 crores odd. We have received orders during this quarter of almost 2 crores, wherein we were L1 and we got orders from EPC. And during this year, we have already received orders of almost, we're talking about April and May. We are already become L1 in projects which are worth almost 130, almost 80 crores, wherein we are expecting to. I hope that covers your question.
Yes, sir. That covers.
All right.
Sir, my next question is, we have seen a bit of volatility in operating margins. What is the sustainable operating margins can we expect in the total business?
I think there's a lot of disturbance at the back of your line, which is, but I can answer. If you can put yourself on mute, I'll answer that question. If you see the steel prices and the zinc prices have behaved very in a very volatile manner, which is unprecedented in the history of commodity prices. The volatility in the margins has actually been because of these two commodities behaving in a very sharp manner. So what happens is, though our contracts, mostly 90-95% of our contracts are PV-based contracts, but these PV contracts are, of course, workable, but when suddenly there is an increase every day in the commodity prices, everything cannot be passed on to the customer, and it is only the average of the month on which the customer, gives you a price variation. So that has caused a little bit of volatility in the profit margins. But on a sustainable level, I believe about 10, any EBITDA in the range of about 10 to 11% with a PAT in the range of about 5% is something which is sustainable in the long term. I hope that covers your question.
Yes, sir. That covers. Thanks for your elaborate answer. Sir, my third question is, what is your expectation or outlook for the solar segment going forward? In case you can throw some light on that.
Yeah. See, solar segment is what happened is the prices of energy which is being generated from the solar sector has actually come down heavily during past few years. And overall attraction of putting up a new solar power plant for any developer is something which is become a question at the moment. And when your customer doesn't make good amount of money, it becomes difficult for a supplier or a manufacturer like us to make good money from him. So solar is growing in parts and bits. There is some demand, but in the solar sector, as a customer, as a developer, they have margins on their own working, which ultimately, boils down to us to, give better rates or, work on a very low margin. So if we have an opportunity wherein we have orders which are better priced, so we would rather do that rather than doing solar. And that is one of the reasons that our business in solar has been very limited one.
This is the
Hello.
operator. Mr. Nandish,
Yes.
Is that answer your question? Mr. Nandish, we are not able to hear you. Please unmute your line from your side.
Yeah, sorry. Actually, I'm done with my questions. In case I have any, I'll come back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Mihir Desai from Desai Investments. Please go ahead.
Thank you for the opportunity. So firstly, I would like to check that what is our current capacity utilization, And so basically, I wanted a comparable for FY22 and FY21.
Okay. So the utilization during FY22 was less compared to FY21.
Okay. So can you throw a ballpark number? Hello?
55% capacity.
Sir,
Can you?
this is the operator. Sorry to interrupt you. Sir, there is an audio loss from your line. I would request you to please repeat yourself.
Hello? Is it better?
Yes.
Hello? Okay. So I was saying that compared to FY21, we operated at a lesser capacity in FY22. In FY22, the capacity utilization was almost 60% compared to 75% last year. One of the main reasons for less capacity utilization has been the abnormal movement in the commodity prices. So what has happened is the customer has deferred their purchases at the prices which became unsustainable for some point in time. And to give you an example, one of our major customers, like Indus Towers, they bought towers worth almost 225 crores last year, whereas this year they bought only about 80 crores, 90 crores, which was at a higher price. There were two reasons. One was the abnormally high prices. Second was their merger with the Bharti Infratel and consolidation in that particular space. Of course, in the EPC business, since most of the projects are on PV basis, the supplies are made accordingly. But in the private sector, the abnormal high steel prices put a little dent in the supplies. That is one of the main reasons for operating on a lesser capacity. Now that the steel prices and the zinc prices have more or less stabilized and rather on a little downtrend, there is a good demand which is coming in from both telecom and other sectors also. I hope that covers your question.
Yeah, it fairly covers, sir. Thank you. So my next question would be, sir, can you throw some light on the CAPEX which we are doing at our UPN new Chhattisgarh facilities? Sir, how much we have already work we have completed, and what would be a feasible date, when it will come under commission?
Okay. So for our new galvanizing plant at Hapur, the orders for the machinery and everything have been placed. There's some machinery which is being imported, which is under process of being shipped probably in the month of June. Partly it will be shipped and partly it will be shipped in the month of July. There's some local machinery which is being manufactured at the moment, and we should start getting the machinery in the month of August. And the land has already been bought over, and the foundation works for the shed and everything has started over there. And the construction of shed is under progress at the moment at UP unit. And we hope that we should be getting this operational by end of this year, which is 6 months from now or 7 months from now, which is a fairly good, practically feasible, reachable kind of a date. In terms of for the Bhilai unit at Chhattisgarh, we are in the process of acquiring land. Partly we have already acquired. Partly the land is being acquired, and some of the land will be acquired next week or within this week. And there'll be some part of the land which will be acquired over next month. And then the construction of shed and everything would begin in the month of July. And we also expect that the production should be taking place by December, maybe a couple of months here and there.
Okay. And so follow up on this, so how much of the time, once the capacity is commenced, how much time will take to ramp up this capacity?
Okay. So for the galvanizing plant, there's one particular reason that we are putting up this galvanizing plant. This is one of the largest in India. Is that we have some very good orders for the power transmission monopoles of bigger diameter, okay, which are a better margin product, and the new plant would specially cater to that. So once this new plant becomes operational, probably we'll put one of the plants, existing plants, on a hold in the sense as a standby, and we'll use the bigger plant to take care of the running production also. And if the plant is ready by December, the capacity build-up should not take much time. Probably in a couple of months or 3 months' time, the whole capacity will be built up in terms of galvanizing plant, right? Apart from the teething troubles or whatever we have whenever you commission a new plant. As far as a new unit at Bhilai is concerned, again, we should be building up capacity by the end of this financial year. In next 3 months, once the plant is operational, it should be running at a good capacity of almost 60-70%, and gradually it will come to 90-80% within next 6 to 23-24. We are expecting that it should be running at a full capacity.
Sure, sir. That answers my questions. If I have more questions, I'll join the queue.
Sure. Thank you.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Priyam Podar from Value Equity Capital. Please go ahead.
Thanks for taking my question. I have 3 of them. So this is with regards to the telecom technology. So if you can help me out, what is the breakup of the order book between 3G and 4G connectivity? Any new bidding that we have done in this? When can we expect some traction for 5G technology? And if we are seeing any orders for 5G technology, can we expect some margin improvement?
Okay. So to basically clarify, there's nothing called when we are supplying towers. There's no difference between 3G, 4G, or 5G. So you have to understand that the towers which are running off 4G, they would be mounted with 5G antennas as well. Plus, to enhance the capacity, there'll be a lot of fill-in sites wherein only 5G antennas will be mounted and used. So right now, the focus of all the companies is to increase the connectivity. And for that, since 3G is almost obsolete, 2G is running in the rural areas. The idea is to increase the 4G connectivity in the rural areas as the demand for internet and internet-related applications is increasing in the rural areas by a tremendous percentage. So all the companies have geared up to actually increase their presence in the rural areas, and they're increasing their capacity in 4G areas. So the towers which are being put up in the rural areas at the moment are typically being put to cater to increase the capacity of 4G. And of course, these towers would also be used to put up antennas for 5G. That's how these towers have been designed. Now coming to 5G, enhancing capacity for 5G, there are a lot of small cell sites which are going to be put up in the urban area, which has already started. The traction has already started. 5G spectrum is just around the corner. We were expecting it to happen. It has to be done as per the earlier announced policy by the end of June. But it might be announced maybe any day or maybe next month. It is anyone's guess when the government decides to auction that. But the companies are already gearing up for increasing their 5G presence, and they've already started putting up a lot of small cell sites in the urban areas. Of course, the sizes of towers have gone down in terms of tonnage, in terms of height, but the numbers have actually increased. I have mentioned earlier also in my interaction with a lot of people. Today, India has little more than 600,000 towers, which actually give it almost around 800,000 points of connectivity in terms of the shared towers. And to have a 5G rollout effectively across all the country, probably you need 1 million more points of connectivity as soon as possible. It is anyone's guess that how much time the companies take to actually connect 5G all over the country, depending upon their revenue stream and everything. So the opportunity is huge. I mean, it is anyone's guess. There are industry leaders who've been talking about this. There are people who are going through this. But yes, the traction for the rollouts in the telecom sector has started. It is much better compared to last year. And as soon as 5G is auctioned, as I said, a lot of activity would further happen. I hope your question is covered. Do you need
yes. But that comes with a margin improvement, right? If we get...
Well, for us, we are selling steel, right? And
correct.
Typically in steel, whether you're making a 100 kg part or a 1000 kg part, typically the manufacturing cost, remains the same. I mean, on a per kg basis, more or less. So the buying price also for a customer remains more or less same per kg basis. So as such, the margins would improve only from the point of view of the capacity utilization and better efficiency at our end, not because the customer starts buying something which is at a higher price. The customer is not going to buy it at a higher price because it's 5G and we can command a premium for that. No. It will only come from our internal operations.
Okay. If I can squeeze one more.
Yes.
Do we need to have any additional capacity for providing 5G towers?
No, not at all. Not at all.
So our existing capacity would be able to serve if there is any more demand for this 5G.
Yes, we have enough capacity available. Plus, as I said, we are already building a new galvanizing plant that will give us enough capacity to produce anything which is required.
Thank you so much. If I have more questions, I'll be back in the queue.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Priyansh Desai from Keynote Financial Services. Please go ahead.
Yeah, hello. So my question was largely seen in the line of 5G, so I think this has been answered well. So I think I am done here.
All right. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Priyam Podar from Value Equity Capital. Please go ahead.
Thank you for the opportunity once again. This is pertaining to our balance sheet. What will be the outstanding data number, which includes the retention amount? And if you can highlight the cost of capital or the interest rate that we are bound to pay for them.
Yeah. So Mr. Pramod, who's with me, our CFO, is going to answer this question. I'll just move on.
So as far as debtors are concerned, our debtors are in the range of 250 crores. And as far as capital cost is concerned, it is around 7% annually. As far as retention is concerned, the debtors only include retention of 25 crores. Out of 250 crores, 25 crore retention is there. And another 25 crore retention which has been shown as security deposit.
Okay, thank you. And just one more question. If you can let us know the rationale behind the stock split from rupees 10 to face value rupees 1. I believe currently we are trading at in the range of 240, 250 range. So why the need of stock split at this juncture?
See, if you see in the market, there is a less float of equity, and sometimes some investors have actually approached us that there's a less liquidity available in the market. This is primarily the reason for splitting and nothing else.
Okay. Thank you so much.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is a follow-up question from the line of Mihir Desai from Desai Investments. Please go ahead.
Thank you for giving me the opportunity again. Sir, I just wanted to ask you that in our last presentation, if I compare, the capex cost planned for Bhilai unit was somewhere around 40 crores, and now it is reflecting around 60 crores. So, sir, can you please throw some light?
So I think, at that particular point in time, this was in the initial stages wherein we envisaged a capex of 40 crores. But keeping in mind the current trend and the requirement of kind of structures which are in demand now, the plant has been sort of redesigned, and we are expecting more capex in that. That's it.
Okay. So, and one bookkeeping question, sir. What are the current debt levels and cash levels in the book?
So debt level, it is we are having an 90 crores. And
Sorry to interrupt you, sir. We are not able to hear your audio clearly.
is it now I am audible?
Yes, sir.
Yes.
So our current debt level is around 235 crores, which includes 190 crores of CCMS and 45 crores of BCA. And what was your second question?
About the cash.
So cash, what you want to ask exactly? Cash in hand is around 10 crores in the books.
Okay. And going forward, we look the debt levels at this current levels, or do we see that it hiking to some?
So just to explain you that as far as GI plant is concerned, which new GI galvanization plant, we have not yet taken any disbursement for that particular capex. Now that capex disbursement will be there in this financial year. And as far as Bhilai is concerned, we will be applying to the bank for the term loan for financing the term loan.
Okay.
So these two loans will increase in the books as for the capacity enhancement.
Understood, sir. Understood. And sir, one macro question which I had, sir, how are you looking at the industry panning around? And, how do you see, which are the pockets which you are targeting for, say, coming years for, growth going forward?
So, Shashank sir will answer this question.
Yeah.
Okay. So, of course, power transmission is one. Telecom is another one. Telecom is going to grow at a good pace in next couple of years, wherein we see a lot of traction coming in, which has already started actually, to be honest. And power transmission and railway electrification, of course, are the going on businesses. The new division of heavy structure steel division has good traction, wherein we have order book of almost 200 crores. And we are targeting the industry over there. See, we have received a very good breakthrough in that sector, wherein we have, the new unit which was started last year was approved by L&T and Japanese consortium for making the bridges for the bullet train project, which is going to be built from Ahmedabad to Mumbai. So for that particular project, we are building almost 10,000 tons of structures for the bridges, and this is going to go for next couple of years, right? And as soon as probably these structures are under process and being delivered, I'm sure government has already announced more such projects. As I believe, 7 more projects have been announced for bullet train. So we being one of the first movers in that particular sector would definitely have an advantage over the years to come. I mean, by the time the new project starts, we would have already delivered certain bridges for this Mumbai-Ahmedabad project for bullet train. This would definitely give us an edge and extra, probably in terms of qualification to bid for more projects like this. Plus, there's a lot of expansion which is happening in the steel industry in terms of building capacity. Today, India's steel manufacturing capacity is only at about 100 million tons, compared to China, which is running at almost 600 million tons. After closing down 300 million tons, it was actually at 900 million tons. But because of pollution issues and other issues, the industry level, manufacturing capacity level in China for steel is at about 600 million tons. In India, this government focused to increase the steel manufacturing capacity in India and take it to almost 300 million tons level by the year 2030. So all the big wigs like Jindal, Tata, POSCO, ArcelorMittal, they are on the expansion plan. They are running on the expansion plans and building capacities for the steel manufacturing. That gives us a good business growth area wherein we would help them in putting up those plants and building structures for them. To build a new steel plant, you need millions of tons of steel to build that particular capacity. And all those structures, we are experts in building. That is also one of the first areas where we are pushing ourselves. I hope that covers your question.
Yes, sir. Fairly covered it. So just last question on peers. So when I want to compare our company with listed or unlisted peers in the market, so who are the companies that we can or we should select?
See, I'll tell you. To be honest, with the kind of product that we deliver and deal in, there's no one whom you can compare us apple to apple. Okay. See, KEC, for that matter, does only EPC business of power transmission lines and railway electrification, plus manufacturing. So you can compare our EPC business with them, right? In telecom, we have the maximum number of products which we offer to our customers, and we are market leaders in telecom. I can proudly say that. And there's no one else in the market whom you can actually compare us with. I mean, nobody has that kind of product range what we have, right? So it's a mix of entities whom you can compare us partly. You can partly compare us with KEC, you can partly compare us with Skipper, you can partly compare us with Concall in the listed entities, right? In the unlisted space, probably there are a couple of other manufacturers who are dealing only in telecom. You can probably compare us with them.
Okay.
Yeah.
Okay. Sure, sir. I think that's all from my end. Thank you.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants, to ask a question, you may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
I think since there are no more questions, we can, but I believe that it was a good session with each one of you. And I would like to thank once again all of you for joining us for this call today. Your questions, of course, were insightful, and I appreciate your interest in Salasar Techno Engineering. FY22 has been a strong one, and we remain committed to uphold our operational excellence and deliver growth consistently. I look forward to speaking to you all once again during our next quarter meeting. Meanwhile, please feel free to reach out to our IR team at Ernst & Young for any clarifications or feedback. Thank you, everyone.
Thank you.
Thank you, everyone. Thanks, everyone.
Thank you. Ladies and gentlemen, on behalf of Salasar Techno Engineering Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.